welcome to another market review and outlook for the week of April 6 to 10. We're looking at the market generally, how the market has performed toward the end of the month of March and the first week of April. And I'll tell you, the market has maintained the downtrend. If you look at the chart here, you can see that for straight 4 weeks now, the market has been on a downtrend despite the seeming reduction in decline. But I will tell you that for the week ended April 3rd, the market lost 3.51 against the previous week 2.51. So this is huge, and I'll still tell you that in this trend of market going down, there's still opportunity in it. Yes, that opportunity might be for those design investors that want to take risk. For when the market is like this, many people are scared away from the market. It's only those designing investors, intelligent investors, that comes to the market at this time that there is blood to clean the blood by taking position at a good distant price. But for me, I would still advise that despite the downtrend, market is still technically looking good for long-term investor. Even though that are playing short-term, also you need to use information to play the short-term, and that short-term you have to be also very, very careful, because when the market is on the downtrend, short-term trading or traders most times always get their finger burnt. Why? Because the trend is not in their favor. The trend is looking down. But the good thing is here that as many stocks are hitting 12 years low, 10 years low, 5 years low, it's become attractive to play those stocks for a short time. And you can see that the market is very dynamic at this point. For you to really gain from this market, you need to put your eyes in the market. You need to watch the market. And that is why this week we are likely to dish out some trading opportunity. But this trading opportunity is coming in two ways. This trading are stock that also you can still hold forward for a long time if the market go against you. Why is that? As we are speaking, technically, I see some signal in some stocks, but knowing that this week again, that the lockdown is still in force, we don't know how the market is going to go. But activities of the last week, that the lockdown started, with the federal government order on Tuesday. Don't forget that the previous the days before that, the previous week, we have started also Lagos State lockdown already. That means almost we're getting to spend about 2 weeks of lockdown, no movement within the federal government order and the state government order altogether. But still know that we still have about almost a week again to complete the 14 days lockdown from the federal government. These are the only things I'm seeing that can influence the market. But if not, the price of stocks are looking good. And because I said earlier that technically there are some stocks we can play, but the good thing is that the fear of the economy, yes, is still there, because after the coronavirus, post-coronavirus, what will be the fate of the nation economy? I think the government is trying to approach the National Assembly to approve about 500 billion to bail out the economy during and after the virus spread, or the virus epidemic issue. But for me, as an investor, what you need to do is that you should not panic in this market at this time. Like those I said earlier, if you have lost money in this market and you have not sold, these are still paper loss. But selling stock at this point is not wise, unless that company you are and that company has no fundamental anything to offer. But if it's a company that has no fundamental and this virus induced bear market has brought that stock to that level, hold on, watch. Because if you remember, I always said that after you have used your technical analysis, your fundamental, the next thing is patient. And you know that in this case now, the company's fundamentals have not diminished, and at the same time, the economy, there is no war. That means it is this event that has brought the market globally and domestic to this level. On that note, I would advise you hold on. Yes, after the coronavirus, it might take time, but the good thing is that there is difference between, as I've said it earlier in the last week, that the difference between meltdown of 2008 to 2009 and what is happening today in the market. You can see that even the World Bank has already earmarked about $160 billion to bail out, the ravaged country with this virus in the next 15 months. Fine, it tells you that they also have planned, and as we speak now, the private sector has also donated money for this, to manage this thing within the economy, and the government is also going ahead to seek approval of a 500 billion to manage this incident. Fine, yes, once the companies, the factories are reopened, activity will come back again. Yes, it might take time because the purchasing power of the people will be affected, but there are some sectors that will still going to benefit from this down market. Like I said, if we are looking at the healthcare sector at this point, because of government involvement and fund set aside by CBN to intervention in this sector, they are likely to have good numbers and their price will go up. Mark you, they are benefiting from, because this is their time. Activities there is high. They will produce drugs, they will sell because there is demand for it now. And also there's lockdown. Things are not coming in again as usual. For that, the local manufacturing sector of this healthcare will also have activities to do. On that note, I see potential in that. Also, I've said it earlier again that no matter the economic situation, whether in banking sector or the financial sector, boom or recession, this sector will always be there. Only that when the economy is in recession, you don't expect much from the bank, because it is what is systemic thing. It's what we call sovereign things. It's just economy. Everything in the economy will be affected. The government will not have much to spend. The individual, the companies, it will slow down the financial movement, but the bank will still be there, strong, standing firm, strong, because of what the activities. Whether the economy, you're still going to move your money from the bank. For that, the banking sector, the healthcare now, and the food sector. Knowing that the prices of those food and beverage sector has dropped drastically, you can still look at some. And the building sector is there. Despite that, the federal government and the state are likely to cut their budget, but that will not affect some essential amenities, essential capital projects. Road maintenance will be there. That means we might also likely see that sector doing well. And don't forget about transportation. Go and check it all over the world. That whether there is boom, there is recession, people will move. It's just because there's lockdown that people are not moving. That means these are sectors that you look at this point. I will tell you, as an investor, you keep your attention on the market direction. Where is the market going? Is it the right time for you to jump in? That is what we're looking at. Don't panic. Look at your position. Check your score. Look at where is your advantage, where is opportunity, and take advantage of that opportunity. I'm telling you, smart investors are still accumulating. I have a client that called me last week. He said, mop up for me Dangote cement at what? At 16 naira. I want 16. And you're able to get that stock at that 116 before it moved back to what? 125 naira. It's accumulating even when they mark down. And I will tell you, because of the nature of that Dangote stock, knowing that this is one of the stock that is used to rate Dangote as one of the billionaires in the world. And the more the stock go down, the more his rating will come down. And knowing that order of Dangote group, sugar is also falling, NASCOM is also falling, and it is that Dangote sugar that has about almost 80% of holding that company that really give him the good value he wants. And this stock, whenever it crosses 100 naira, the man will not, or the group will not allow it to remain at that level. They will not find way. Knowing that early this year, around January, they approved their buyback already. Tells you that as they are buying back, they're going to cost the what they are not sharing issue. If you are there thinking long term, I think that will be better for you than putting your money in treasury bill and we are waiting for 5.8% for a whole year. Even the bond market we are looking at, the bond market is shaky. If you remember that federal government suspended their bond, the issue last week, just because of the economic situation. And the economic situation, many countries, especially the emerging market or frontier or developing economy, defaulting in their debt responsibility, in their debt payment is what is high, and that will affect the bond market. The place you can see so-called the place you can play safe is the equity market. It might take time, but if you are in good stock, you're still going to make money in the short time. Then we need to shine our eyes and be in good stock. We don't need to panic their panic, because there's a difference between intelligent investor and a novice. If you really has followed us so far and as we guide, don't panic too much. All you don't need, take wise investment decision. Take wise investment decision. Yes, we know that cash liquidity might be the problem now, but if you have fund to invest, just hold on. Once you notice a rebound from this trend, you jump in. And also, if you look at the activities for the second quarter of the year, yes, the number of cases in Nigeria is increasing. Globally is increasing, and it's sending fear. But I'm telling you, this will not last for too long. It will not last for too long, because vaccine, as I said earlier, is coming at 10 to 30 here and there. Once you can check this, you can see the number of people that have been treated. And here in Africa, you can see that the market, the rate of spread in Africa is not as high as matured economy. One, it shows you that yes, it's because of that tells you that the travel nature of people from Africa is not as high compared to those in the matured economy. At the same time, the test tube the test tools to run these things are not yet available, and also the weather might also be a good thing that it's not spreading. As I speak, India, Nigeria, and other developing countries, the rate of death is still low, just because of what? One, said that the rate of testing to know it is there, and also the exposure of traveling to where the country that has this high cases is also there. Africa, the kind of continent where we yes to travel, will not travel as much, but those that has business model, it tells you the kind of things that is happening. You need to read in between the line. You don't need to panic about. You need to understand what is going on. Yes, there will be economic difficulty, challenges here and there. It's not peculiar to Nigeria, it's global thing. But I'm telling you, as the global economy is finding direction, Nigeria economy also be finding direction. That's why I said pay attention to market direction. It's very important. It's not the time to panic. Look at things. Is it changing? Is it dropping? Is it dropping? The market is going. Look at what is happening. Look at the curve of the crisis, the curve of the inflation. Is it dropping? You can see that if you look at the developed economy, the spread has started slowing down already. But here, because of the tools for test is not much, we cannot say now, but I'm telling you that the rate of death here is still here. Even the number of cases, if it is still there, is still low. And people might say it's slow because of what? The testing rate is low. But I'm telling you, these have not sent panic here already, but that in another country, even their panic already start dropping. And knowing that why the crude oil price has really dropped drastically is a result of closure of the economy of the world. When there is a total lockdown of the economy, global economy and local economy, you expect that consumption will naturally slow down. Even intertrade will naturally slow down. That has affected the crude oil price because the demand is low. But now that the two giants in that market, Russia and Saudi Arabia, has agreed, and OPEC is facing a meeting, they are likely to cut what? Production. Once that is done, the price might likely go up. Knowing that as we speak now, the price is above $30, which is the benchmark for our new budget. After the review, our budget was reviewed to $30. Today it's going at $34, and after the meeting it might likely go up. And because I am also seeing that the global economy will gradually start reopening in this month of April, and that will start finding direction. And looking at the different countries are injecting funds to revive the economy. You can see what China have done already. This is likely to happen in other climates because of what? After the whole thing, you need to come back to what? To productivity. You see how the Central Bank of China, the People Bank of China have injected the fund in what? in the economy, in small scale business, factory they open, their airline, airport they open, just to bring activity again. It's likely to happen, but you as an investor, you should know where to be, because these uncertainties has created opportunity for design investor to make money. Don't be fearful. I know, yes, it might look everything, but it's not going to be the same forever. It's going to take time, but take advantage of what you are seeing, or to build wealth. To build wealth. That is what you need to do now. I said earlier that pay attention to market direction. Survivor of the capital market crash. Maintain your watch list. Survivor of this coronavirus induced market crash. You should maintain your watch list. That is why if you're a follower of Invest Data, you already have a watch list for long-term investors and medium-term investors. Those watch lists were still maintained. Look at it. Watch those ones. You see the right time to buy those stocks. Because remember, you will know exactly when to buy, because we always dish out sell signal and buy signal at the right time. Then you need to look at the sectors, the industries I've mentioned earlier, the sectors I mentioned earlier. Fine. Another one is for you to apply what? Patient. You need to apply what? Patient. This is what you need to do this week. You don't need to panic. Like this week now, we're bringing out just few stocks for trade, but why those medium term of 6 months and 1 year are still there, but only few stocks for trade because of what? One, there's some companies that asked to mark their dividend, to mark down for the dividend they've declared, and there's something that are also we're expecting that because their prices have come low to a level and the sign of rebound, we're going to dish out these small stocks, these few stocks to you to look at what you can do this week. Yes, as I said earlier, that any trading position this time is not too right because of the market is moving against trader, but you can still take advantage of those that are touching new lows and buy as they go up small. You take money out, but those that really want to invest for long term and to take advantage of this position, you buy your stocks in stages. Don't buy everything at once, because if you enter at once and it goes further down, you feel bad. But when you buy small and you see how the fund that you need to buy, you buy in stages. But definitely this expected Q1 number in this month of April, as also the NSE have extended the full year. You know that means any season will be till the end of May. On that note, you can see that there will be activities again as these numbers are coming, and those that will be marking down, those that will be releasing their number. And you can see that the banking sector have really demonstrated that those sector is well regulated. Nearly all the banking sectors, all the banking stocks have released their results. Apart from the First Bank we're expecting this week, knowing that First Bank result will always come on the second week of April, which means the result of First Bank is likely to come. As a trader, you can decide to enter that stock when results come that you're able to place on table. As you move, we are not waiting for dividend. What will trigger the dividend, the price at this point that this market is just that announcement of dividend. If something reasonable, it's likely to go up. From the earnings we are seeing, we're not seeing the buy paying more than within 30 to 40 kobo. Because they paid the previous year 2008 26 kobo. Then the payment was expected that it should not be less than between 30 kobo to 40 kobo. I think that is a good one. If they can pay that will move the price a little. And knowing that this bank, First Bank, has come to stay, and you know that this is a bank that have survived many storms. For that, I see potential in it. And stock like Zenith Bank, you go to the buy and sell signal, you see the stock that you need to look at and hold for long term. On that note, we're drawing the curtain here. But as I said earlier, this is the time we pay attention to market direction. Keep your eyes on your watch list to see the right price we were expecting, the right volume, and the earnings you want to enter. Look at it. And at the same time, the sectors, as I've mentioned, like I said earlier, is just because the liquidity in the market is still not much because of fear. Everybody is selling down, but that should not drive you away from your position at a huge loss. All you need just to watch the market. Look at the sector that has potential that I've mentioned earlier in this program. Stick with those sectors. I'm telling you, when the market turn around between now and end of the quarter, I'm telling you, it will smile to the bank, because I see that the market will really bounce back as from Q3 to the end of the year. We might see a good market despite that the economy will still be struggling. But once the global economy is open and normal trade returns, things will gradually come up. Yes, it might not be overnighting, but 2020 will be a year for positioning all through. because if things start improving, we'll see a better market as from 2021, 2022. But this year will be for positioning. That means the opportunity to take earlier will determine what you get at the end of the year. No, this is what we should expect this year. See you and God bless you.